Hello and welcome to another Major Market Movements End of the Week Market Review for July 17th, 2015. I'm Quad G, and in this video we're covering the FX markets, the equity markets, and some of the energy markets as well. And starting off with here with the US dollar, we see it continuing to creep up higher here on the 1 hour chart. We'll back out here to the daily. And we see that we end the week and the day in the top 10% of the weekly range. So, and that's all. Also, if you take a look over here in the weekly, you'll see that we close well above last week's inverted hammer candle. So that washes out that bearish potential, and that can often be very bullish. So I'm thinking that there is certainly enough momentum here for the price to come up and challenge this very critical resistive trend line here, this base resistive line that connects these the top of a wave 1 here and the top of the the origination of wave 1 and the top of wave 2 here. That creates a base trend line that is very critical for counting this as a subwave 2. And that's currently above here at about 98.60 or so. If we break above that, that's going to be bullish, and it could lead on to a further advance in the days and weeks ahead. But if we get a solid rejection, especially while not even touching that particular trend line, if we fall short of it in reverse, that's going to be bearish. So very tedious, critical time right here for this market. We'll see what we get going into next week. But so far, it looks like in the short term, we're going to continue to move up a bit higher. The QG3 is still in a bullish alignment to the upside here. We've closed above the upper Bollinger Band here, showing some a little bit of overbought tendency there in the upper Bollinger Band. And then the weekly I just showed you closing above last week's inverted hammer candle. That's typically bullish as well. And the EWO, not much to show you there. And RSI, we've busted through the 60 level, clearly up here in the 66 area. So I think that could let it loose to come up to test the 70 level or even higher in the short term. And USD on the weekly MACD is still open to the downside on the weekly, and on the daily we're open to the upside. So US dollar, I think, is still bullish in the short term for sure, but it's going to come up to key points of resistance here right around the 98 to 84 level, I think, here in the next week or two. All right, let's move on to, I'll just take a quick look at USD CAD, the Canadian dollar versus US dollar. We broke out above the last swing high, and we continue to move higher. I do think that we're probably headed to a significant mid or long-term 61.8% Fibbo at, let me get my lines, Fibbo retrace, high low. Then we go here to here. And you can see how a 61.8% Fibbo is right there at about 34.63, and I think there's enough momentum there for us to move up to that level, challenge it, and then we may have another chance of a reversal. I do think that this big long slide down here from basically 2001 down into 2007 October was a it looks like a standalone impulse to the downside, and it looks over since 2007. I think we've been working on maybe an A a B, and now a C wave to the upside. C wave could end right there at that 61.8% Fibbo. It could go higher as well. There's some manic territory right here, this manic breakdown that was never back tested, and that's way up here at the 4,500 handle. So that's also another potential target zone. Okay, so let's move on to USD JPY. All right, so we've popped up here recently, and the uptrend looks like it's starting to tire out somewhat, but no firm evidence of of topping action just yet. There is key resistance, which we'll get into in just a moment on the other charts. However, this low down here at 120.40 is very critical midterm support. If we break that, then I think you'll see the price unravel to the downside. You can see here on this trend line we've tested once, twice, 3 times. Another visit to that trend line will be a 4th time, and could let loose a rule of 4 breakdown to be seen thereafter. The QG3 is bullish to the upside, and the weekly may be very close to the upper 10%. I haven't measured it, but it may be very close to there. I wouldn't doubt that there may be a little bit more to the upside, but it still remains to be seen. Just have to wait and see if we get one more small little incremental high there or not. The RSI is coming up on the 60 level. That's going to be a key point of resistance on the RSI. If we see a rejection there and a drop back down below 40, that will certainly be bearish for the midterm. The daily MACD is turned back over to the upside there on the daily, but here on the weekly, we've still maintaining a very slight bearish alignment to the downside. So overall, I'd say it's a mixed picture here for USD JPY. I think in the short term, we may see another small incremental high coming up to test a key level of resistance, which I'll show you here in a minute. Break above that resistance, and it could change the picture significantly and allow for the price to even come up a bit higher, maybe even double top or exceed at 125.80 or so. Let's see. The euro is basically reflecting the dollar. Not much to see there. The Aussie dollar here. It looks like it's continuing to the downside. I don't think it's finished yet. I think there's certainly more potential to the downside. This does look like 3 waves down so far. It could extend into 5 waves with maybe a 1, 2. We could finish up a 3 here soon, maybe a 4th wave bounce, fill in this manic drop, maybe bounce up here to 75, 7600, and then drop again into a 5th wave. I think that's a possibility, but the structure certainly doesn't look complete. I think there's more downside to be had there. And Great British Pound, take a look at that real quick. So far, it looks like just a 3-wave bounce here. This looks like a wave A, maybe a wave B, and a wave C here finished. The other count may be a 1, 2, 1, 2. That's another possibility. And though I think it's that possibility is waning. There's really nothing much there to do with at this point in time, so I've just been leaving it alone. Let's go ahead and take a look at the Dow. This is the 1 minute chart. Looking at earlier today, but we had this gap down today, and we've come up and filled it in a bit, which is fine. But I'd say the Dow could be starting to roll over here if it can stay below that 18,120 level on the index. So we'll have to wait and see. There's nothing really solid here saying it's a reversal yet. The price has shot right back up here, right above the 50 DMA. The 50 DMA and the 200 DMA are drawing in a bit closer. I think the next time, if the price comes down and takes out the 200 DMA again, and especially this last swing low at 17,465, I think the market falls apart and starts selling off quickly to the downside. A key point of resistance is right here at this last swing high, when that is currently at 18,188.81. If we stay below that, we still maintain the downtrend, and we are in a downtrend since we have a lower low, lower high, lower low, and we still have a lower high in place. So as long as we're underneath that level, we're still technically in a downtrend. The weekly close looks like it's in the top 10% of the weekly range there. So I do think there's still the possibility of a small push higher. But again, we'll have to see whether or not there's enough momentum there to come up and take out that 18,188 level or not. The EWO, nothing really solid there of interest for me to show you really. RSI coming up here to test the 60 level again. You see the last time we tested the 60, which is right here at this key high, we saw the rejection. So we're right about there at this point in time as well. Could see a rejection there also. And the MACD on the weekly is open to the downside, and on the daily we're open to the upside. So mixed picture there. I would say overall the Dow is looking weak, moving up into this post-Greek China savior rally here. Everybody's thinking the Greek tragedy is over with, and China came in with their central bank muscle and basically dictated terms and were threatening to arrest people who were shorting the market, which is just absolute craziness. I don't think it's going to stand. I don't think it's going to last for very long. And so I do think there is a potential, while we keep below this last swing high at 18,188, we stay below that, I think there's a good potential of a turnaround here. But we're going to have to wait for some stronger evidence going into next week. All right. Crude. All right, crude oil here. Zoom in on the 1 hour chart. All right, so we've had this sideways consolidation over the last few days here, and I think we're finally breaking lower. I think this might be a fifth wave to the downside. We've got a wave 1, wave 2, which looks like a sharp correction. So we got a wave 1, A, B, C, sharp, wave 2, wave 3 to the downside, and now we've got this sideways flat with an A, B, C, sideways, wave 4 it looks like, and now we're working on this wave 5 to the downside, which I don't think is quite finished to the downside yet. Let me zoom in here. I think we've got a wave 1, a wave 2, wave 3 may have finished today. We're working on probably a sideways choppy wave, small wave 4 over the next day or two, and then one more drop to the downside, maybe in the middle of next week, maybe close to the inventory report, and then a possible turnaround in the middle of next week, I think, for a wave 5 of 5 to the downside, which may come down here and test this 61.8% Fibo right down there about 49.89, maybe even a little bit lower into the mid 49s or so, and then we'll look for a potential reversal. Now, this reversal back up, I think at a very minimum, could be just a bounce to fill in some of this manic market movement to the downside. I think it could bounce all the way up here to maybe 56 or so. So there's a good, $6 or so of potential to the upside, even if it is just a bounce. I see that as a possibility. Could it go up much higher than that? Sure, absolutely. There's reason to think that this is a wave 1 up, and this is just a wave 2 to the downside with an A, B, C in the works. So wave C could be finishing up of a subwave, or not a subwave, but a primary wave 2. And once that's finished, it could be a third wave to the upside. There's certainly some manic behavior way up here in the 70 levels that could be, the market may want to fill up as well. So we'll be watching for that. The Bollinger Bands, everything's sloping to the downside. The market's continuing to close underneath the 3 EMA, but we're well above the lower Bollinger Bands. So still technically bearish in the short term while we're below that 3 EMA. Close above that 3 EMA, that black line there, would be a good indication that maybe our bottom is finished and our bounce is starting to take shape. And the weekly, not overly bearish, but somewhat bearish with a lower weekly close, but not enough to close underneath last week's intra-week low there at 50.59. We closed above that just slightly. EWO, nothing to show you there. The RSI, we do have a positive divergence here on the daily RSI between this last swing low and this one. We get a lower low in the price, but the oscillator has a higher low, so that sets up a positive divergence there. And I think even if we do creep down a little bit more, I don't think it's going to be enough to wash out that positive divergence. So that's certainly positive, bullish, and MACD in the weekly, we were bullish to the upside. We've closed out some. That's looking neutral on the weekly, and then MACD on the daily is open to the downside still. So overall, I think crude, we may have a little bit more to do to the downside as far as what I can see on the LA wave count, maybe into the mid to upper 49 level. But then that's where I'm going to be interested in looking for a reversal, a pop up, and then a stab at taking a long to the upside, long position to the upside, maybe to go up to the 55 to 56 level, at least, maybe even higher. So we'll see. All right, let's move along here. We'll go to the Elliott wave charts. All right, here's the dollar index. Here's again that blue trend line, very key resistance for a subwave 2. If the price was to go above that, then there's no way that you could sit. Well, technically, it could still be a wave 2, a subwave 2, but the probabilities shrink so far that it's really not worth considering anymore. So we'll see how the market reacts to that trend line coming up here in the next few days. USD JPY, again, here's that key point of resistance right here, the top of wave A, which is the last swing high. So to maintain a downtrend, we need to see the market stay below that level at 124.36. I think there's still, if this is kind of a bull flag, there may get another little incremental high here, but it'll be a bull-bear fight right there, I think, between that key level resistance and whatever the bulls want to throw at it here early next week. Now, if we break that trend line, I think the price will come up and at least backfill this manic drop that here that never really got filled up. Fill that, and then there could be another chance of reversal, or it could just keep on flying. We'll have to see. Currently, instead of counting this as a subwave 2, which I guess we, technically still could, though it's really ugly to count it that way. I have changed it to this count, which makes a little bit more sense to have it be a wave A, B, and a C, which is basically an expanded flat, or even a running flat at this stage. Natural gas. We still got the ABCDE pattern that's still technically available, which would be bearish and could allow for a drop to the downside. But we also have this rule of 4 breakout, and the price action is so far being able to maintain itself above that level. So that's bullish. So we're really in a very tedious neutral spot here between these bullish and bearish patterns. I think there's enough there to maybe back out of the position somewhat. I think a move above this key level resistance there at 293 could allow for a breakout to the upside. So I'm thinking about adding a breakout play to get to the long side if that does occur. So I'll go into that with some detail with the trading in the next report. Obviously, if we come down here and break below the blue trend line, that's going to suggest that this was just a false breakout, and we could collapse further. There is this pesky gap down here that never got really filled in, and I hate to see that, especially expecting a long-term move to the upside. I much prefer these type of gaps to get filled before it takes off in earnest away from the gap. So I'll wait. I'll wait and see. We will just this position, though. I'm thinking of leaving in at least one tranche. So and then set up a possible breakout, a play to the upside. All right, here's the Dow. This is my bearish crown formation. However, this bounce here does look like it could falter. It may not be able to make it above the last smaller shoulder here. If we take a parallel trend lines between the left neckline and the right neckline, and we bring that trend line up and parallel it from the last extreme shoulder here, the last biggest shoulder, and extend it across, you can see how that could be a potential point of resistance there as well for the Dow. Okay, just a second here. Okay, so the YM contract here is also pushing against that blue trend line. Can't quite get a daily close above it, but it's not giving us a firm reversal signal yet either. So can it pop up yet again above that level? Possibly. It's really hard to say. There's just nothing firm there right at this point. And a key level resistance there is also going to be this last swing high, this wave 2. In order to maintain the downtrend, we need to keep it. Price is going to have to keep them below that level, which is roughly right around 18,180. If we take a look at the VIX, volatility index, we see some evidence of potential topping action here with the VIX coming all the way back down to a key level of support over the last couple times that the market has risen up to tops. And the VIX has found support right there at about the 12-point range. And so I do think there is a good chance that that's an indication that we either have topped out or we're very close to topping out. And we'll watch for the VIX to shoot right back up here. But as of yet, as of today, there's just, again, no firm commitment or bounce to be seen as of yet. So might have to wait till Monday. And also wanted to point out this opportunity that's coming up in the near future. Here's a long-term chart of coffee, and back out here. I'm seeing this as we've had this 5-wave move to the downside, which could be a potentially a wave A or a major low. I don't have enough data here to go off of to give to figure out whether or not this is a major low or not. But I do think that we do have an initial impulse up. That's a standalone wave A or a wave 1. And then we've got 3 waves down in A, B, C, 3 waves up for a B wave, and now we're working on this 5-wave move to the downside that doesn't look like it's quite complete yet. We've got 1, 2, 3, 4, and now we're working on the final 5th here. We'll zoom in on it. If we take external retrace of the wave B bounce from its origination at wave A, we get an external retrace level of about 116, and which just so happens, if we back out here, just so happens to be enough to come near the completely fill this manic run to the upside here. So I think we could still see this market come down, finish wave 5 of 5, fill in that manic move to the upside, which was in 2014. Maybe touch this external retrace of 1.618 there at that 116 level, and then that might provide an excellent opportunity to get in long for a nice bounce, maybe even a wave 3 move to the upside that could sail extremely high. It could go well above 225. It could basically double that. We could go into the 400 range fairly easily, I think. So we'll wait and see what we get there. All right, so that concludes my end of the week market review for this week, and I hope you all have a great weekend, and we talk to you later. Adios.